We're talking 5-minute charts today and some strategies to go along with it. The 5-minute charting time frame, kind of an in-between type of charting time frame. If you're a short-term trader, typically you're going to look at a 1-minute, sometimes even lower than that, or a 3-minute even. When you get to the 5-minute charting time frame, it's interesting because you start to see some higher time frame levels, guys, but that doesn't mean there is an opportunity if you find yourself being pulled towards a 5-minute chart.
Yeah, and this is a great thing for us to switch up and do because, candidly speaking, like I use a 1 a lot of times and then a 15-minute to find levels and then a daily chart to find trends. But that 5 can be really informative for a couple of things. Like, and one of them to find those key levels, maybe for breakouts. But also at 9:30 when the market opens up, you might just see a little bit more clarity as to where some of your consolidation levels might be. I'm going to use something that has been trending a little bit here in Occidental. Oxy, been moving because oil is going crazy. Who knew? But something that I was able to quickly look at when you pull up a 5-minute chart, and I've split the days up so you can sort of obviously see, when you talk about yesterday's triple top, and a significant one, and then you see this 61 and about 61.20, and that was off of a lower high, you got a lower high the previous day at about 61.50. So I look at those two levels, 61.50, and then the lower high the next day, it's about 61.15, 61.20. And then you come into the pre-market trade, setting yourself up for the open, and you're grinding higher. Oil's looking very, very strong. And then it puts in a top at that 61.50 level. Right before the open, we dip down into that 61.20 and then start taking out the high. Now, I'm not saying at the open, okay, like you have to have this trade at 9 o'clock to buy that dip. No, what makes more sense to me is establish that support level from that resistance the day before that you'll see on the 5-minute. And when it makes the breakout at 61.50 at the open, and we're testing that level on the way back, whether you buy the break early or whether you buy the dip at the open at that price, it's giving you a tight out. Like you have a notion and a reason to believe if it breaks below this level here with a nice little tight stop, you can just get out quickly, which gives you a good risk to reward trade that I probably wouldn't have seen on any other time frame. And as a matter of fact, I was trying a deeper dip buy looking at my 15-minute chart on Occidental and didn't really see that there was a quick scalp trade off the open for the long, which did give a setup. So glad we looked at this time frame.
Yeah, for me, I do like the 5, but you have to frame the 5 with a much larger time frame. So in this case, you use the 5-minute for timing, for entry, for management, but then to actually determine the trade, I just like to pair something much larger, so I'll pair it with the daily, right? So what I'll do is I'll start with the daily. Where are my levels at? What can I work with? In this case, we can look at Tesla. Hey, Tesla 1,000. Are we going to get a nice little move past the 1,000? Well, if you look at the daily, you know we're going to run into some resistance around 1040, 1050, and then 1120 it looks like. And then you break it down. Hey, what's the 5-minute doing around those prices? Well, they cleared 1,000, but then once they got into the 1040s, you start to see some hesitation. You can start reading into the candles a little bit more. So my whole thing with the 5-minute, it is helpful, but you need to pair it. You cannot use it on its own because it's a lot of information. At the open, like Neil said, there's a lot happening at the open you can kind of decipher with the 5-minute because you're looking so close to the microscope, right, with the 5-minute. But now, if you zoom out a little bit, you get to see the bigger picture. So you have to be able to go in and out between the close look on, I prefer 5. I choose not to go further than the 5 because once you go even closer than the 5, it becomes a little too noisy, I guess is the word I would use. If you go to the 1-minute, there's a lot of noise. I don't know how you could decipher that. So I choose the 5 as my baseline for on the minimum side of time frames, and then I'll use the daily to see the bigger picture. So between the 5 and the daily, you can use the 5 for timing and just management purposes. Where's the market hesitating? Where's the buyers? Can you see it through the chart? Clearly, you can see around 1030 on Tesla, and then we break through 1040, and then we come right back into that 1030 area. So clearly, that 1030 area is going to hold some volume. Now I can use that information to see what that's going to help me with when I go back to looking at the daily and see if I can actually find a trade around those price points.
Pretty good exercise, regardless of what you normally use, to simply go out to a time frame a little bit higher than the one you typically use to learn to be patient even, guys. Look for the same exact setups, but it's a lesson in being patient and being able to hold a trade a little bit longer. So there's a look at the 5-minute charting time frame.